Yo, what's going on, guys? Anything look familiar here with this chart? Here's today's activities. That's a lot of work to go down $1.68, 2.89%. We're still sitting at 56 bucks, 56.43 to be exact. But this same morning run every morning, and then hammer, 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 hammer. We're so used to seeing that for 6 months. Doesn't faze me a single bit. Price doesn't faze me a single bit. They haven't covered a single share. That's all we need to know there, right? So, pretty good day, and some more better day with the news. We're going to touch on the news of the day, touch on how thick this media FUD has become. We touched on it last night with the women traders being at a disadvantage. Remember that? And then today, all of a sudden, they're twisting it around that the retail traders are manipulating AMC. Yes, exactly. I know. You don't even have to say it. I already know. Let's touch on this really quick. The old Stonko tracker. We have 60,619 in the money right now. Once we hit 60, there's another 41,487. I think personally, in my opinion, we'll hit 60 by the week. I don't think they can hold this down much longer, especially with these rules. The 00, it's just that $60 mark. It wants to blast above that so bad, and they can only hold this down for so long. That's just what I think. Okay. Let's check in on our guys here. Let's see. Not too busy, but they're there. It is what? It's 11:43 at night. We always have to check in, our nightly check-in with our friends over there. So they are there. Then another good piece of the news here. Carlos Trades tweeting this out earlier today. This has been talked about since about 2 this afternoon. But no more dilution for AMC. Ladies and gents, Form S3 has been withdrawn by AMC, which removes any more dilution. Great frickin' news, right? So that's outstanding piece of news. Over here is the filing. If you guys want to check this out in detail, I'll pop that in the link right there. And then speaking of good news, another beautiful piece of news. Look what has popped up in the Fed register today. 005 is fired itself in there. And then right here, look at this. Scheduled for publication on 6/30 of 2021, which is tomorrow. So we will see. Good news, good news, good news. Fintel over here on the institutional ownership / buyers. If we scroll down here, let's start on Friday's activities right here. But a bunch more filings in here, and we got some big names as we're used to in here. You got up here Sun America, these fine folks, PEJ, Invesco Dynamic, Leisure and Entertainment. Then you got BlackRock again, Fidelity, BlackRock, Fidelity, and more as you go down here through the 25th. So we haven't touched on that in a while. I keep forgetting about that. But yeah, those popped up in there. And then let's get over to some media FUD here, and then another quick thing on the way out the door. I like this article here again. We obviously touched on this last night. That was the big talk of yesterday and today, right? But down here, look at this. He touches on the old MOAS in here. Outstanding, dude. GME and AMC, as these stocks already drained $12 billion from hedge funds, all market players are forfeiting their financial walls. The MOAS relies on a couple of key ingredients, right? As we know. Then he touches on short selling, naked shares, scale of naked short selling. Both of these ingredients are strongly believed to have manifested themselves acutely in the form of phantom shares, resulting in 359 million worth of GME shares failing to deliver, FTDs. They accounted for over 1 million GME shares. Down here real quick, we got to touch on the Citadel comments. Market makers and hedge funds like Citadel Securities are already in trouble because they have to repurchase borrowed shares because the stock price goes up. In turn, the scenario would create significant buying pressure, keeping the stock price higher, right? As mentioned, hedge funds have already bled at least 12 billion because of this. However, on top of the covered short layers, synthetic shares come into play as they mature into realness when the shorts are either margin called or closed. Consequently, this is when their losses become drastically amplified. Hence, the MOAS. Outstanding. Let's check in our dark pool guy. Dark pool guy here to report heavy shorted volume of 56.32% made possible today by Reg Show loophole that allowed of convertible notes as shorts. Legal department comes out swinging with the recall. Shares obligations fell to 489.62 million shares with a value of negative 26.62 billion. Ish, oofda. And then a couple more of these nonsense articles here. This one, I don't know if we touched on this, but this is dated June 15th, right? So a couple weeks ago, this article. Now, by Investor Place. Let's look at one from today. Look at this. They're the same article. Look at the headline. Headline. But it's obviously different wording. This one is posted today, by the way, you guys. Sell AMC stock before the herd dumps the shares. Absolute nonsense, right? So just crazy. Keep putting them out. This one here. This is just a humdinger of a son of a gun here, right? I'm going to pop this in here, you guys. Read through the whole thing, but it's pretty crazy now. This is what we're coming to here. For nearly 6 months, retail investors have ruled the roost on Wall Street, even though retail investors have been putting their money to work in the market for over 100 years. Okay, yeah. They've never had such an enormous impact on equity prices as of 2021. More specifically, retail investors on Reddit, Twitter, other social media platforms have been banding together to buy shares of out-of-the-money call options on stocks with very high level of short interest. So, sure, the out-of-the-money calls, yeah, there's been a lot of people buying, but I'm pretty sure on both of these stocks we own a gazillion shares, as we know with our AMC, and we know them GMO boys too, hold them. I don't think we're really purchasing a ton of out-of-the-money calls. We own the companies damn near, right? So let's scroll down a little bit, but the kicker is the manipulation is occurring. However, it's not coming from Wall Street, in my view. It appears the AMC retail investors are a true source of share price manipulation. Remember, this stock is not supposed to be at $58. This is not natural movement. This stock would probably be at 100, 200, 300 without a squeeze, just on its own, without their manipulation. So you can start up here with 100 years, like, we've been trading 100 years with no problem until now. All of a sudden we've started a problem, and then down to this here, complete flip-flop once again, with us being the manipulators. And it gets better. Bear with me here. However, their actions on social media appear to point the intentional interface of supply and demand for AMC shares. Specifically, Reddit traders are using a combination of hype, purposeful ignorance of fundamental operating data, and misinformation to artificially drive AMC's share price higher. Now, let's leave with this.